Hello, everybody. This is Harvey from the Passive Income Through Commercial Real Estate podcast. In today's episode, we have Esau van der Zanden. He has a lot of experience in the commercial real estate industry, over 30 years. Esau, thank you for being with us today, man. I appreciate your time.
Welcome. It's great to be here.
Awesome. Yeah, of course. Esau, can you give us a little bit of a description of who you are, what you've done so far, just for people who don't know about you?
Sure. So real quick, I have an accounting degree with a minor in economics and mathematics. Took that and got my CPA and was an auditor for one of the big accounting firms at the beginning of my career. Worked on a large real estate portfolio. And from there, fell in love with real estate. And from there, went and joined a young private equity firm that specialized in real estate syndication, where I learned the real estate business and the process of taking investments and structuring them to get the best outcome for the investors. After that, I at 29 started my first company that did basically real estate syndications, but at a neighborhood level in Chicago. That's where I'm from, and then over time did a couple other companies. One where we managed a large portfolio of office warehouse space for a family office. And the most recent company was a advisor to nonprofits that had excess real estate that wasn't part of the core business of the nonprofit. So sort of like the Art Institute of Chicago or different universities like Loyola, DePaul, the Boy Scouts, things like that. And took that land and valued it and took it to market and helped monetize it for those nonprofits, taking a asset really that had no value to them and creating a lot of cash that they could then put in their business. 15 years ago, during the global financial crisis, my partner and I started CapRock to focus on distressed real estate and helping lenders work out the problems. In the process, we built a vertically integrated firm that has property and asset management, leasing, and investment sales, and then more recently added the acquisitions investment arm to build a portfolio for the partners of the firm. Over the years, that's added up to 3 million square feet of retail space out of about 6 million in total, where the other being office and industrial. But we really enjoyed working with retail and found that it was the best return per dollar invested. And that's why we focus on it exclusively from an investment standpoint.
Gotcha. Thank you for that description there, and for that bio. So sounds like you do have a long track record of syndication and putting deals together, which is awesome. But for anybody who is not really familiar with retail but wants to start investing in retail, what would you say for them? What's the advantage you invested in CapRock, for example?
Well, I think the advantage is first of all, there aren't many or any firms that I'm aware of that do both the service side, the management, leasing, and sales in-house with their investment portfolio. Most of them, farm that out to third parties, and lose the synergy and focus and incentive to succeed that comes from doing that with your team rather than organizing third parties to do it. So our team, I have a head for each of those service areas, plus an investment advisor with deep pockets and a really long history of investing, which totals up to, I added it up, it's 145 years of combined experience on $2.5 billion worth of real estate. So, so number one, we have a long record as a company, the 15 years. We have a lot of combined experience among the senior team. Number three, we're vertically integrated, so we can provide all those services to the investment. Number three, we really focus on multi-tenant. We to keep the portfolio diversified, the tenancy base. It prevents the loss of a single tenant, putting the property in jeopardy, creating negative cash flow and potential loan default. So that is, the advantage of our program. Well, I guess I'll go on. Additionally, we diversify geographically. So, if a particular area, say, North Carolina hits a bump in the road, all our assets aren't there. They're spread out over 13 different states in the Midwest, the Mid-Atlantic, and the Southeast. We, as a philosophy, are somewhat contrarian, so we avoid the hot areas throughout the country where there's what I think too many bidders, which raise the price of the asset and lower the yield as effectively. We also, and I can go further if you want, really focus on what I call Amazon resistant tenants that are much more resilient in the face of e-commerce.
Okay. Yeah, no, thank you for that explanation there. So SL, since like you have a lot of experience, a lot of track record, a lot of expertise, and you do have your ducks in a row here. But based on the economy right now with the high interest rates, where do you see the market right now, and where do you see it going?
Well, okay, for people who are paying attention to the capital markets, we're all aware that we went through a period of inflation. We're all aware that the Federal Reserve has raised interest rates, which have the combination of the two have driven up the price of mortgages for commercial real estate, which increases the cost of capital and basically drives prices down to create the extra yield that you need to make sense with the higher cost of the capital. So, but the beauty of this is this stress that these two events have put on the market have caused a lot of dislocation in the market where sellers and buyers have very different views of value, and where owners of property get in a position where they need to sell, let's say because of a loan maturity, where the property doesn't appraise to the old value, and the bank is saying put in more money, and they don't have it, so they then go and sell to pay off the loan. That's one instance, but there's opportunities then. They're stressed, and you can pick up that property at a better price and at a better yield. So we're very aggressively paying attention to the 13 states that we work in, and reviewing properties that are put on the market and the reasons behind it, and how realistic the seller is, and flexible about the pricing to, create the yields that we're looking for.
Gotcha. Okay. So talking about the overall market, and not to, I don't want to change the subject. I want to stay on this topic. How, I wouldn't say easy, but how more, I would say, flexible it's for example, someone like you in the retail space to be able to get deals done as opposed to someone in multifamily, for example, because I know multifamily, there's a lot of people chasing that sector. So what's the advantage of being in a market where there's not a lot of people chasing the product?
So that right there is an advantage of retail, and particularly the neighborhood and community strip centers that we focus on. The big boys don't really participate in that, so I'm competing with a lot of generally smaller investors that don't have the access to capital that we have. So we're able to be more aggressive, more credible to the seller, and also have the ability to take down bigger properties than, say, the smaller, whether it's an individual or a smaller investment company. That is a reason why we're able to compete, effectively in this. So back to your question, we're monitoring not only properties that are listed by brokers for sale, but also going through databases of owners of properties, looking at those properties, if they fit our investment criteria, contacting them, seeing if there's any interest in considering a sale, and then working them where we don't have competition from other bidders, and are able to many times pick up a property at a better price than we would if there was competition for it.
Gotcha. Makes sense. I want to dive into this topic, if you don't mind, because I think it's really important for viewers and listeners to understand. So when you say Amazon resistant tenants, what would be a few examples of those?
So there's two types. One is service providers, which, obviously you can't take a service and put it in a box and ship it. There's no way for Amazon to sell, hair salons, hair services, or nail services. They can't, get a pizza to you in the same time that a pizza guy could, or, you can't do fitness in a box. It's necessities and daily uses and convenience that comes from having this property in your local neighborhood. That is where the Amazon resistance, definition comes from.
Okay, makes sense. And then before I wrap this up, SL, I know CapRock has you guys, we, because I'm part of the company as well. Where do you guys see yourself? Where do you see yourself for the firm going forward, like in the next few years, as far as acquisitions goes?
So we see a really good market going forward, irregardless of the fact that currently there's a bit of dislocation from the high interest rates. But the cost of construction has soared, which is limiting supply because new product isn't coming on the market. Despite what you might think or read in the paper, there are more stores opening than closing. Last year, there was about 1,000 more new stores than closed stores. Rental rates literally have gone up for 11 straight years on average 3%. So there's more income, which means higher values are being created from that income. And the quantity of tenants that are expanding or opening stores for the first time is growing. An example is online businesses that are opening brick and mortar stores like Warby Parker or Amazon, or there's just a slew of companies that you now see. You go, oh, this I used to buy, only through the internet, and now I can go to the store. It's convenient. I can try it on. I can feel it. I can return it there, even if I buy it online. So online companies have learned that having the brick and mortar store can increase sales in that market area by 30 to 40%. So it significantly increases the sales for those companies. So all those factors, I think, lead us to have a very strong market going forward. Once things stabilize in the buy-sell arena, we expect a pretty fast growth in our portfolio. We're targeting to have $500 million dollars invested in the next 5 to 8 years. So, our business will flip. It'll be mostly owned properties versus third-party, managed properties.
Okay. Well, that's really good information. Thank you, Esau, for giving us that clarification. But before I let you go, Esau, do you want to tell or anybody, do you want to share any information before I let you go? Or any final thoughts?
Yeah. Well, I would, because of my economics minor, I pay a lot of attention to the markets and to the economy in general. And I would say that, contrary to what a lot of people believe and what the press has said, and economists have said over the last 3 or 4 years, because even before the pandemic, everybody was talking about a recession. And they're ignoring the differences that exist today that create the strong economy that we have. We have jobs that can't be filled because we have a shortage of workers, in part because we've restricted the inflow of immigration, which has always been a driver of how the country has filled open jobs, especially jobs that Native Americans don't want to do. So you have the job growth, you have the low unemployment rate, which is not going to change because of the fact that the baby boomers are all retiring or are retired, and there's fewer workers in the labor force in total. So there's going to be demand for those workers at higher wages. That extra income shows up in the retail sales and other services that from the economy. So I would say throw away the pessimism. It's not totally smooth sailing, but we're not headed into a bad period like the Great Recession or some of the other periods where the economy cycled down, like that have happened in the past.
Okay. Yeah, I consider myself as a realistic optimist as well. See it as it is, but don't big yourself up too much, right? Well, Esau, I appreciate your time. I really do. How can people find you or find more about CapRock?
So CapRock's website is caprockre.com. And my address is sl@caprockre.com. Best way to find me is to send me an email. I'll respond to it and we'll take it where it goes. And maybe that results in a phone call or a Zoom session. But you know, I like to talk about what I do and the business that I'm in and why investing in retail is such a great opportunity. So I encourage people to reach out.
Yeah, definitely. And I can see the passion that you have towards what you do. That makes a huge difference too. Anyways, SL, I appreciate your time. I'll see you guys, everybody in the next one. I appreciate everybody's time, and until next time, SL, thank you.
You're welcome. Thank you.
Bye.